Welcome back, everyone, to another episode of the Unquestioned Podcast with Louis de Bade and Willem Hempe. Luigi, my man, what are you doing? What is that behind you? Where are
I'm
you,
in the
man?
mountains, as you can see.
The very white mountains I see.
Oh yeah, snowy.
Tell me, man, how has it been, or why do you have a whiteboard behind you? What's going on?
Yeah, I've discovered this amazing invention. It's like a big canvas, like a digital whiteboard, but in real life. So you
What?
can actually touch it. I walked into it a couple of times, hurt myself. It's it's really cool to be doing stuff in the physical world instead of on my laptop screen. And
Uh,
this looks a little bit
I don't
like,
agree.
I think, your stock portfolio as well. I don't know.
As my stock portfolio. The funny thing is, I think that's how every single person's stock portfolio is currently looking like.
Mm.
Maybe not if you're fully into SaaS solutions, but the market is kind of on an all-time
Ripping. Yeah.
ripping, an all-time high. So even if you're a monkey or you are a physicist, both portfolios will be on the going up. And the funny thing is as well, sometimes when I see my portfolio going up, is it just, am I a good stock picker? Or is it just the big macro trend that I'm following? And then I feel like I'm a genius, but actually I'm just in the market. Maybe that's as well a good bridge to our topic of today. And the topic of today is labor versus capital. Very, maybe high level, but maybe Luigi, you want to hit us off. The problem of labor versus capital. Where should we tax the population, or where should the government, let's say, grab a little piece of the pie so they can better redistribute it or be the referee in the game? Where do you feel like they should take it from, and where are they currently taking off? Maybe let's start off there
Yeah.
and then give our opinions on the topic.
I believe this is the deciding question of our time. It's the most important problem to solve, is how do we tax and reward capital and labor? And we're
Mm-hmm.
going to define these things in a moment. But why is it such a relevant political problem? Well, as we were saying, it's possible for some people that have amassed a large mountain of money, that are
Mm-hmm.
sitting on a lot of capital, let's say 10 million euros, to stop working and simply grow their pile,
Mm-hmm.
become richer by doing nothing, by sitting around. The question is, sometimes it's wrapped into all these different layers, but it's part of the underlying kind of dissatisfaction and the angst and the anger of a lot of people that politicians are playing with. It's this idea of the rich are getting richer. Why did I want to talk about this? Is because the reaction of politicians is
Mm-hmm.
to start taxing that accumulation of capital, like we've seen with our previous episode on the box 3 laws. Or if you have gold and you simply want to protect your purchasing power, have a hedge against inflation, not have your money in your bank account lose value and evaporate. And the reaction is to start taxing that. But I also don't think that that's a good idea. What's your perspective on that?
Well, my perspective is it's not a good incentive if we will take more and more or tax more and more the people that are doing something active in the economy. They're taking risk, they're creating companies, they're go out there and do a job that maybe people don't want to do, and they decide to do it. That should be motivated. That should be at the end of the month, they have more left over to uproot their life to buy goods and services that make their life better. And that should not the government take parts of. But it's a very fine line when, like what you say as well, is we should tax more on capital, but the quiet capital, the people that just invest into an index because they didn't do anything. They just follow the S&P 500 or the NASDAQ. These companies picked inside of an index, and over the many years you get a 10% on average return. That is kind of, let's say, they know that the inflation will be lower, so they are growing their wealth without putting any effort in it. And that is
Right.
kind of wealth that is built in these let's focus on the S&P 500, wealth that is built in these companies that just goes straight to this passive population that doesn't put any effort and hard work to make the pie bigger. It would be a lot better if the people that are working in these companies, the people that are taking risks, the people that this wealth that is being built by these 500 largest companies in the US, that it goes to them, not just in the people that are their great-great-grandfather built a good business and they are just, let's say, living off that wealth that was built and it just keeps growing. You could say, and that's maybe one extra thing I add, because that great-grandfather built a business, took a lot of risk, and then the reward should be that his generations after him should not have to work and can just enjoy it. But it's funny, in the market, after a certain size of capital, it is, let's say, not fair or not really, or after a couple of generations, that they just keep growing their wealth without putting any effort in the world. And a lot of Belgian families, for example, that are very wealthy, they became wealthy because they have old real estate, of a lot of real estate, and they just ride the wave, but they sometimes as well don't improve their real estate portfolio. They do everything in cost cutting, but don't make, let's say, the world a better place. And that should be, in my opinion, should be more taxed than the people that take risk and are actively investing with labor or capital.
That's a good distinction. Like quiet money. What is that? Let's start by defining these three groups. If we take A, B,
Maybe
and C.
remove your mountain.
Yes. All right.
Move your mountain, Louis. Move your mountain.
This is the path. This is the path.
Voila, okay. Now the mountain has been moved. Now we can start.
What do we mean
ABC.
by labor? Don't take it too literally. By this we mean any type of work. Yeah, the angle is kind of funny.
It is okay.
But labor is any type of work, including white collar work. So including your sales job when you're on the road, whatever. It doesn't have to be construction. It's just the fact that you're actively employed and breadwinning, driving all over the country, convincing people to do things, whatever it is, you take action, right? And B, I would say, is active capital. And that is when you put money to work. But as we've covered, where I would still say it's worthwhile because there's risk involved. So for example, you're a speculator, you believe that self-driving is the future, you listen to the Unquestioned podcast. So you're a believer in Tesla and you invest some of your savings in Tesla. That is still a bet that could go wrong. You're a speculator. Or even better, you invest in a small startup as an angel investor in a small company that wouldn't even see the light of day otherwise. So you're basically growing the ecosystem, helping people, even a friend setting up their restaurant, you believe in them. That to me is active management. And the problem is really with group C, that is passive. And there's no problem. I don't have a problem if you don't want to take risk and if you want certainty. But I don't think you should be able to grow your mountain by doing nothing. So the key distinction between B and C is certainty and security should have a price, because if you're going to take money out of your account to survive or to buy nice things, then I mean, maybe you're allowed to keep most of it, but it shouldn't be growing, because otherwise, what's the point? You're not really incentivizing people to get off their ass and start building and working. What do you think?
Let's say, contradicting thought or against your way of thinking is, if you invest, because number C is how we both see it actually bad, but isn't it currently seen as bad because it's what is the passive investing where you can grow your wealth without doing anything, is by investing not in T-bills or in government bonds where you loan your money to the government and they pay you back minimal interest. Is you can grow your wealth because you invested in the indexes of this world. But in a way, there is also risk connected to it, because it could be that the S&P 500 or the Nasdaq drops a lot. It's just the beauty, what we've seen over many decades, that this pool of companies, it's also interchange. So S&P 500 of today is not the same 500 companies
Correct.
that they were 20 years ago. So
I
there is,
disagree in part. I think you're right and you're wrong at the same time. I think
start
over
with
a
the
long
right.
enough,
Why am I
yeah,
right?
oh, well, over a long enough time, it becomes what they call the risk-free rate. So if you like, there's even a metric that
Mm-hmm.
if you put your money in the S&P for more than 10 years, you're guaranteed to not to lose money. And so it depends on how big your pile of money is, but in the end, it's kind of consensus to save and have some exposure to these tech stocks and to the S&P as well. So I don't know if you can keep your money parked for 20 years and it's a safe bet, I would also consider it safe. And I don't think you should particularly become richer that way. It just it depends like how long your time horizon is.
Yeah, but to go back to this, it's like the government then, because that is often what is pushed back, and the government should not take away the incentive to invest. But this way, we do decentivize them to invest, but we decentivize them to invest into passive things.
Yeah,
So,
yeah.
let's say the tax rate, like at the end of the year, how much did you grow your wealth? Okay, 35% gets tax of that, of the gains that you've realized, not unrealized. And that actually, the question is the percentage should be a lot higher, for example, than for the passive investments and the active investments. And then the government should
Well, that
actually
this is my
say what are
problem.
active
Yeah.
and what are passive
Yeah,
investments.
exactly. So this is why I bring this up is that as soon as we need more money, doesn't matter the country. The reaction of politicians is let's have a look where we can tax people. Well, labor, if you live in Belgium, you know this, we have record high taxation already.
Mm-hmm.
So we're not going to look at confiscating a piece of people's labor because we're already taking so much and
Mm-hmm.
we're taking it from poor people and middle class people. We can't take any more of the money generated by labor. And so their automatic reaction is to look at taxing capital more. But why I don't think that's a good idea is because we're going to kill our future
Mm-hmm.
because they are aiming at group C, but there's no way to kind of, try to tax Group C without hurting Group B, and I think that's what they're missing. So it's a good reaction to look at capital and to say we shouldn't be hurting, we should be rewarding Group A, but it's very tough to make the distinction as we already were discussing between Group B and Group C. So that's why I have an alternative solution, and my proposal is to start taxing something else entirely, which is consumption. So, what I would
And
like to see
mm-hmm.
as an experiment is to, first of all, uh, tax labor less, just so it becomes possible for you to still be a waiter and work your way up, be upwardly mobile. So you're still incentivized to get stuff done. Um, but I would look for the money in consumption. So every time that you buy something, like your coffee, what you need to survive, or your car, I would take it there. So that means if you want to, survive and in Group C, it's fine. But we're gonna look for more taxes here. And I know it's not up to me, but I think that would be a better idea to just basically lower taxes on labor and look for what you spend with it. What do you think?
I don't agree. The problem is in that regard. Um, and now I'm gonna go a little bit more personal. What I see in AI, a lot of the wealth that is being created in AI, you see it's for a small group. The every person, the barista, the person that does a regular job, they don't have that much invested. And the sad thing is, if the government will tax more consumption, it is a majority of the group that doesn't have asset will have less money at the end um, of the month. And you could say like, okay, maybe we should then tax expensive consumption, so more the fancier things in life, the expensive flights, or all these type of things, expensive liquor. But that is also, like, say, a possibility, but also again difficult. What type of consumption is seen as extravagant and what is seen as not extravagant? And they
Well, I
made
would
sometimes,
tax everything. I would tax cheap things a little bit more and expensive things a little bit more, but I would combine it with lower taxes on labor. So that means that
yeah.
as a barista, it's kind of offset. And yeah, I know I'm sounding alarmingly communist and centrally planning in this way, but it would kind
Mhm.
of move some of it away, just like Trump's tariffs do actually, to the people that have no other choice than to contribute if they want to live in the world, consume.
And
Move
but you would
something back to
leave.
the creators, basically.
Yeah, but you that is a new way, but you didn't solve the problem of people being able to sit on their sofa and become
No, but I don't think
wealthier.
we're gonna ever solve that.
And why are we not?
Unfortunately,
Why wouldn't we be able to solve
because
that?
the way that compounding works, the eighth wonder of the world,
Hmm.
is that once your flywheel is in effect, it just keeps growing. It's simplest illustration is if you have €1,000 in your bank account
Hmm.
and you're looking at a 5%
Increase.
return, yeah, interest rate, then you're gonna you're gonna see €1,050 in your bank account after a year, if that's
Hmm.
what they promise. But if you have 10 million, you're looking at like
500K.
yeah, yeah, and you could live off that 500K. So and you may have even have access to better deals. So the what I'm basically acknowledging is that there's no solution to get rid of the C player. And I think there's a case to be made that this should be allowed. I think the distinction for me is certainty should have a price. So if you decide to literally take the safest path out there, not look around, just simply retire, that's fine, but it should have a price. Otherwise, like nothing would move. Nobody would be incentivized to do anything. So that is it for me. Is like certainty should you should be allowed to keep your savings, but not grow them
Hmm.
without active management, without taking a form of risk. Otherwise, what's the point? So that for me is the distinction. If security is fine as long as you could, as long as
Yeah. But the only last thing I would want to share is for a person that is doing a job and he as well, each month he puts €500 or a certain amount into the S&P 500. By the end, when he's 65, he will or she will be a millionaire. And I think you would as well punish those people, if you would want to punish the people with already a massive capital. So it should be then, yeah, sadly, but the or good, the people that have a certain amount of wealth of 10 million plus or whatever, that they, funny thing is, are not allowed to build up wealth with these indexes in compared to people of every day who have a lot smaller portfolio.
well, I
Um,
acknowledge that this is an imperfect solution, but unfortunately, all other attempts I think are worse. So this designating billionaires as a special class or having a special millionaire tax or the government intervening and deciding who gets to retire and who doesn't is worse. So I'm not saying that a tax on consumption is the best, but the other alternatives are worse. And I think that is key is acknowledging that there's nothing we can do about people hoarding, rent seeking. Like, is it fair that you have a building or 10 buildings and you receive rent every month? No.
mhm.
Some people are born without that inheritance, but any other solution is too close to communism, a central planning, and to a utopia. So I'm simply proposing, I don't know if the math works out, if this works, but I think it's better to think in terms of contribution via consumption than it is to try to force basically kill risk by
Mhm.
taxing any type of capital gains. Because in fact you can't, like, what if I happen to have a very smart family and we know that tech is going to dominate for the next 15 years and we put all savings in there. Maybe that's unfair, but at least we're taking some amount of risk. And if you start taxing that, it's even worse.
Yeah. True. And it's a bit like that famous quote from Winston Churchill. It's like democracy is the worst form of government, except it's like the best thing we currently have. So it's the same thing that, like what you say, is like it's not perfect, maybe your recommendation, but it could help a little bit, I guess. I'm not sure if that works out, but
Yeah, I'm not excited to start paying 20 cents more for my coffee,
coffee.
but this is how we would sell it to the masses. If I promise that you're going to see more of your salary, less is going to go to the government, maybe then you'll be open to it. Because believe me, like, even if this sounds cool, like looking at the strongest and broadest shoulders, as we say in Belgium, like looking at the rich people, this is not what you want, because it also eliminates your chance at retirement and at eventually building your castle and your mountain of money. So
Yeah, and it gives you also more freedom because the more you tax on labor, the more you limit freedom. And let's say you still have the right to choose where you will do your consumption, and it will be incentivized to consume certain products and goods that are a lot less taxed. So because you have more money left after you've done your labor, because the tax would be smaller, you have more wealth to do things with whatever you want.
yeah, and yeah, please don't get me wrong. I would rather not see taxes at all. But if we have to take a piece somewhere, I would rather see it take, because like imagine you're a waiter and you're working a shift every night, or you're working extra shifts, or you're working the weekend, or you're a salesman driving all around the country day in and day out. That shouldn't be harder than not doing anything and simply
True.
calling up your money manager and getting a guaranteed safe return. Safety's fine, you just have to pay for it.
Follow. Fully agree. And let's say hard work and taking risk, like in our previous episodes, should be rewarded properly. Otherwise, you disincentivize a whole population to just sit on their asses. And that's not how we're going to grow and move forward in this world. Voila. Perfect. Luigi, thank you so much for this episode. Hopefully, everyone, you loved the little whiteboard action there.
White boy with a whiteboard.
It's very white. But okay, hopefully you guys enjoyed it. Please put some, subscribe here on Spotify. Put something in the comments if you agree or don't agree. And we don't maybe have many listeners, but the listeners that we have, we always love to hear your thoughts. And hopefully we see you again next week on another episode of the Unquestioned Podcast. Bye-bye.